So our first picture is Cynan Rhodes from iInvest.
Exactly. Right, so social data for trading. So it's a very straightforward concept. I mean, it's very, very simple. In an ideal world, people like a stock. They think it's they're very happy. Stock goes up. They feel sad, and the stock goes down. But that, of course, is very kind of theoretical, and in practice just doesn't work at all. Essentially, what seems like a very simple concept is extremely complex. One of the things that we have to do is kind of look at the question that we're actually, or the problem that we're actually looking to solve. Now, because we're in like a trading environment, what we're looking to do is generate a profit. Like we're looking for like a greater insight, an edge, something that gives us like that extra confidence in placing a trade. So this is what it means is that we are very conscious of the price and very conscious of how the social data relates to price. What we're less conscious of is the actual sentiment of a stock. Now, I mention that because of kind of where this little niche market really is. The kind of marketing and the excitement over sort of Twitter being used to trade focuses heavily on sentiment of a stock. And we just don't believe that has any value. Primarily, if you look at something like Apple, everyone has typically feels good about Apple, but Apple trades on any number of things from Spanish debt to Fed QE decisions and so forth. So essentially, it's we are very focused on the relationship between data and price. So we've been working on this problem for about a year, just in development, and we're only just starting to kind of put our head above water now. And there's a couple of things that we kind of found as soon as we started. The first is that if you look at straight sentiment, this is over a long period of time, and this is actually using like a dollar ticker notation, pretty much of any stock, then the relationship between sentiment and price is extremely poor. So it's completely untradeable. Now, using volume is a little bit better. It's noticeably much better. But even still, on its own, has a pretty poor correlation with price and is untradeable. What we do see is that in really short bursts, you get a sudden, very high correlation. And you see Twitter basically being sort of news-driven. You see an article, an event, or something, and it's sort of retweeted very, very quickly around the world if it has kind of any impact. And that's when you see message volume, message sentiment, price volume, trading volume, and price all sort of going in the same direction at the same time. And then that's what gives you a trade in a very small kind of window. So again, that starts to change the problem that we're trying to solve. So again, we're not looking at sentiment of stocks. We're now looking for the very, very small windows that where there is a high correlation between that data. We're trying to find out when we actually need to listen to social data and when we actually need to stop listening, when the end of that sort of half an hour period ends and we actually need to get out of the trade. The other key thing is what data we actually listen to. So obviously got the dollar ticker, which has become, and even Twitter yesterday has now started supporting just making dollar ticker symbols clickable. It's kind of an assumption that the first place you start with is to look at kind of social data for a stock is using the dollar ticker, which is a big assumption. I mean, if we go back to something like the Apple, I mean, Apple trades off not only the Apple, the dollar Apple kind of ticker, but it trades off that Spanish debt and bond yields and QE decisions and all these other things. So what that means is we have to track all those other, like we're tracking sort of bond yields and QE and all those other kind of terms on sort of Twitter in this case as well. Now, we're tracking around 1,200 different terms, and that's limited mostly by what we can get from Twitter at the moment, and we'll expand kind of rapidly. So we've got 1,200 different feeds, and the purpose is to work out which one of those feeds, which one of those queries correlates most highly to a stock price at any given point in time, with a view to generating a trade off the back of that. So for each of these 1,200 feeds, God, already.
1 minute of injury time.
Okay, be very quick. So for each of these 1,200 feeds, we are looking at sentiment, we are looking at message volume, we are looking at whether it's financial in nature or general or tech. And we have about 40 kind of statistical signals that we're looking at, essentially to see how fast messages are traveling sort of through the Twitter sphere and whether, like, sort of where they are in their normal kind of bounds and whether basically we need to listen to it or not. So again, 1,200 feeds, 500 stocks, we correlate them all in real time. So 500,000 or 600,000 correlations all in real time to work out what basically that stock is trading off on Twitter right now, and then that, if there's sufficient data and sufficient signals, then that generates, at the moment generates a prediction, but essentially a trade. So very quickly, there's two key things where it is showing as being quite positive. Now, the first, which is quite important, is overnight or market open decisions, market open pricing. It's an important one for us rather than kind of pure trading, just because we get 16 hours of social data to generate one market open price. So we've got a great ratio of kind of data to price. At the end of the day, we can predict the opening price direction 74% of the time. This is over about 6 months worth of data. And we can, at that price, 65% of the time is either met or exceeded. So it's quite successful. It doesn't always, I mean, it's quite different from a trade. We don't take into account gapping up and down or spreads or any of those type of things. It's just a prediction, but it lends itself to being quite positive. So last thing, during the trading hours, we kind of score it differently, just because we've got a simple momentum algorithm. So obviously price and volume is taken into account, and that kind of changes things. We run basically a version of the algorithm with social inputs and one without, all at the same time, and basically compare the results, and we show a definite increase in improvement with the social algorithm of about 2%. So essentially, that's it. Questions?
Questions for Cynan?
Hi, Cynan. Sorry, we talked earlier, but there's a couple of things I thought about since we last talked. Why do you look at terminology or terms within your social search? Why don't you, I mean, the big issue with trading is about the sort of known unknowns and the unknown unknowns, right? Sorry to be confusing. It's a black swan theory from Nassim Taleb, but it's the issue is that, you know, one of the biggest stock market movements off the back that was predicted by Twitter was essentially when Michael Jackson died, right? Which you probably wouldn't have picked out.
I think guess. They predicted it, but yeah.
Well, no, they didn't predict it, but it was one of the biggest impacts, sure. And it was the first place you heard the news.
Sure.
It's more about news and the psychology of the news that impacts markets, that affects, any news affects markets essentially in any which way, and that news tends to come out first on Twitter rather than Reuters or Bloomberg. Wouldn't there be better looking at models which looked at the relationship between things that are trending on the market relative to what people were following on the market? Because I'm sure you can get that kind of data, right?
The simple answer is yes, but there's only 5 minutes, so it can't be included. So, yeah.
Hi, just a quick question. Is your business model providing this methodology or this tool to traders, or are you planning to invest your own money using this methodology? And if your plan is to provide this as a tool, then, and if you're confident that this is going to help you predict stock movements, why not trade yourself?
Yeah, it's a natural one. I guess we don't trade ourselves. I mean, it's not quite ready for trading anyway, but essentially we're two technical people. We're not traders. We don't have backgrounds in that. So early on, we made the decision to remain technical, and we see ourselves as a data supplier, like a Bloomberg of social data. And with that, like at the moment, we see that we need to go into building our own algorithms, essentially to prove to us and to everyone that it can actually work. But it's sort of going forward, once we've actually done that and got sort of professional clients, we'll just be providing the signals, the statistical kind of bounds, the content that people should be looking at. And, you know, funds can do their own algorithms better than we can do at this stage.
Is this something that you can do some back testing, or
Yep, definitely. Sorry, just on that, actually, like DataSift, I'm sure people might have heard, you can go 2 years back on Twitter. So that's, I mean, it's a cash thing, really. I mean, to go 2 years back for all the volume of data that we do is quite expensive. But it does mean that if the money's there, you can back test, quite nicely, that far back.
I think this is a brilliant area, and I think this is still very early stages for it.
Yep.
Derwent Capital, what have you got to say about them, and where do you sort of see yourself versus them in their technology, not in the trading bit?
Well, I mean, Derwent have made an awful lot of noise. They're kind of marketing first, data second. So I think they need some credit because they've gone out there and they're one of the first to pick it up, and they have driven the market forward. So they need credit for that. But I think we remain heavily skeptical of their technology. Their technology certainly was originally based on not just the Bolen paper, but Johan Bolen's sort of technology, and he was doing that out in the US and sending spreadsheets over and things like that. So we kind of question whether how much they understand their technology. I know they've taken on new people, and they've got 4 or 5 guys now, but through all the noise, they don't release data. And in fact, almost no one has released data, and that's the key to this whole thing. I mean, it's I should add everything's published live on our site. That's kind of one of the keys that we do, so you can see it all. I mean, everyone knows that if you can crack this, it's worth a lot of money, but it's short on data. No one publishes data. No one's really kind of cracking it, and and we've still got a way to go. But I want to see data from them.
Cynan, I think this is fantastic as well. Just wondering if you could give us some information on sort of how much you're looking to raise and sort of what you need to spend the money on to sort of take it to the next level for your business, particularly.
I guess one of the reasons we're here tonight is we are raising money. We've been going about a year. We kind of self-funded, and sort of the level of results that we've got now, we're kind of raising money off the back of that. So we're raising 1.5 mil, and that's essentially to grow out our kind of development team, essentially. Well, not just development, but we've got kind of 2. We need more maths guys and more developers, and then we need to sell it.
You may have, I think you kind of answered the question already around DataSift, but where are you getting your data from?
So mostly we still use the streaming API, and that's good enough for about 6 million tweets a day. We do speak to GNIP and DataSift, and particularly have used GNIP data as well to kind of sort of test stuff. And we can test it up to about 50 million tweets a day, about 2,000 messages a second on burst. So that's pretty cool.
Follow up. Do you have any? Is there anyone using this or buying this from you? You said it's not ready to trade.
Yeah, it's kind of borderline. So we're chatting to a couple of retail brokers, we're chatting to a couple of funds, and a couple of sort of analytical type firms that supply data to funds. So it's all kind of talk. I mean, we literally, it's a bit sort of early, but in the next couple of months we expect.
Thank you.
Hopefully.
Hi. How are you getting meetings at these top firms and funds?
We have someone who's helping us raise cash, who's like an independent kind of guy.
Is that how you first started getting in?
Yes.
Yeah. Okay.
Yeah.
How are we doing? All dried up? No, nothing.
Who are you looking to sell this to? What's your target market? Why are they going to buy it from you? If you're publishing the data online, where do they get their competitive advantage?
So we think the market kind of changes a little bit. Like, it's obviously very early at the moment, so we see ourselves as an internet business, and we kind of publish everything that we possibly can. So the first market is probably sort of early adopting retail investors, sort of semi-professional investors. It's going to take a while kind of to move from that into the more kind of professional sort of markets. We're not touching enterprise or banks or anything. That's just sort of too hard. So it's sort of 18 months, probably retail, and then shifting across to professional markets as fast as we can. Why would they buy it? I say we've got different tiers of data. So, and we like sort of how much data that you can actually suck in terms of predictions, and what we don't publish is confidence values behind the predicted trades. So that's the key thing that we see, and we don't publish. So we've got even the volume of social signals. It's a bit hard to publish it. It's really just kind of API suited. So then you get down into kind of payment models for access to the API.
I was just going to say, it does sound very interesting. The only thing, as part of your research, that the open prediction is obviously so much better than the trading, which presumably is because there's a news lead Twitter, and does Twitter lead does the price lead the news, or does the news lead the price? So some of those hit ratios are quite phenomenal for equity strategies, I have to say. I guess my question to you is, and some people have done research from the Reuters sentiment feeds, they struggle to identify real alpha that can be disseminated from prices, or the lead lag relationship between prices and news. And I just wondered whether, as I see this, I think it's best as a feed, working as a feed aggregator perhaps, rather than something that buy-side firms would buy as an alpha generator.
Feed aggregator in terms of like content that they should be reading.
Because it's a massive data set, and I think it needs a proper technical understanding of how to aggregate the data and how to publish it. But certainly
Reuters have already taken a deal actually to, there's a London firm that they did a deal with, which is basically to take, I think it's GNIP's like 10% Twitter feed, that this other firm, I forget the name, but they do sentiment on it, and it's all around stocks, and they supply that directly to Reuters, who on sale.
Yeah, I think it's a really interesting area, but I think you'll find it more in risk and maybe possibly compliance if there's an area there. But people, I'll just say, having worked on the equity hedge fund side, people don't always want to buy alpha. They want to buy risk, and they want to buy compliance.
Yeah,
from a technology perspective.
Fair enough.
Thank you, Cynan.
Cheers.